The gold price doesn't care at all about what is happening right now. Hotter CPI print, gold doesn't care. Geopolitical tension rising in Russia and the Ukraine, gold doesn't care. Fed cut pretty much 0% come July, gold doesn't care. We'll have to talk with Gary Wagner. He's the brain behind the gold forecast about what is gold doing right now. I see it moving in an oscillating range, just $100 range here, and I'm curious where gold will take us through the summer and what can impact the moves. So really looking forward to this conversation. But before I switch over to my guest, be reminded, hit that like and subscribe button. It really helps us out tremendously. It's a free way to support our channel. So thanks so much for tuning in. Now, Gary, it is great to welcome you back on the program. It's good to see you again. Mahalo.
Thanks so much for having me. And I guess gold doesn't care, huh?
It is. Yeah, we'll have to find out. Gary,
absolutely range bound. Yes.
Yeah, it's like CPI print hotter this week. Gold didn't flinch. Like we're sitting at, what is it, 33.47 as we speak, Gary. Tell us a bit, like what has gold been doing the last 6 weeks since we last spoke, and what should we expect?
Well, in terms of the technicals, because you're right, we're getting muted reactions to CPI yesterday, the producer price index today, the tariffs and the effect on inflation. I think the key with the tariffs is that we haven't really felt a bite of inflation yet. We had a modest uptick, and it actually came in on par with estimates to a degree. It wasn't way off. But what we've seen is gold's range compress with a series of lower highs and higher lows. The range is absolutely compressing. And the key is going to be whether or not, on a fundamental basis, if we do see inflation begin to actually spiral and move up to a noticeable degree, whether gold reacts. Because I agree with you, we have gold in a range-bound scenario currently.
Yeah, we'll have to take a closer look at that, Gary, because as like you've said in June, well, the tariffs have been a big factor, but now new tariffs have been announced, higher tariffs to a degree, or tariffs on the EU, and gold didn't react at all. Let's take a look at the chart together, Gary. But what does that mean for the gold price? You've been using the word compression. It's compressing here. What could trigger a breakout in either direction?
Well, the way that I've labeled this is this absolute high that we're looking at above 3,500, the highest historical price gold's ever been. And by the way, this chart is the futures contract continuous, now representing August gold. But we had our first wave down. We're labeling that our A, our B, our C, and I believe we are currently in our D wave, which means that I would expect gold to rise here up to maybe $3,430 if gold unfolds in the parameters of this pattern and you don't cut a picture to fit a frame. So we'll see what gold does. But I believe that we could get one spike up, one final very small correction, and then what we call a thrust. A thrust in a compression triangle is when prices break above this upper level resistance line, which has obviously been superlative resistance, and that will then act as a level of support. And I believe that support will begin at 3,400. Right now, we have support at about 3,320 down to about 3,290.
Yeah, you've been saying last time 3,200 must hold, Gary. That seems to be the support, and it has been holding since we spoke. Have your ranges changed at all? Like, have you upped that target, or not the target, but the floor price?
Not really. I mean, we had the one correction that actually took gold under pressure. You can see the real bodies, meaning on a candlestick that's red, it opens here and then closes lower. So at the closing price on Wednesday, the 14th day of May, and the opening price of Thursday, the 15th day of May, that remains within this triangle. Of course, we're fixing the triangle to this, but that particular two candles and these two lows here really are what we based this lower level support line on. And so far, it has been range bound. The range has been narrowing. And I would expect if gold trades within this pattern. In other words, if gold prices unfold the way this pattern predicts that it might, we should see a range that continues to compress with a high at around 34.30, one more move down, and then you get gold moving in the prevalent trend direction. So I've basically compressed the chart so that we can, as we obviously know, the prevalent trend direction in gold up to this point in which it really narrowed and we got this compression triangle was solidly higher. Gold's been on an absolute tear, considering that it was at about $2,600 at the beginning of this year. And now we're talking about levels that are 33, 34, 32. Even though we might be disappointed in what we're seeing in terms of gold being able to continue this, the fact that it has so eloquently run up and so substantially gained value, my sense is that this is to be expected. And if this is truly a correction after hitting an all-time historical record high, I mean, if we would have talked about gold at $3,500 a couple of years ago, people would ask what we were drinking. I mean, are we drinking from the poison pill here? But now that is a realistic target because we saw gold challenge that price point, wasn't able to sustain it. In other words, when gold broke above that, it was all intraday from about 34.70 to break above 3,500. So we've never seen gold trade above 3,500 on a closing basis, but we have seen gold challenge that price point. And that to me is extremely impressive. If that's the takeaway from this year, we had a solid year in terms of gold's performance.
Yeah, it's been absolutely stellar. Like, I don't think we can complain here, Gary, at all so far. Question, of course, I have now, like, what are sort of the breakout prices to the upside and to the downside? If we look at it, just maybe clarify a bit more. What price target? Like, if we break down, let's say 32, you're showing 32.80 here, for example. If we drop below that, where do you think the next stop would be on the downside? And then we'll do the same exercise for the upside, of course, here as well.
Upside. Well, in terms of support, if we see gold break below $3,280, the next area we would look at is 3,200, and that's these two candles right here that form the actual bottom or the beginning of this compression triangle.
Okay, no, fair enough. And let's play the same scenario to the upside here. Of course, we got the high at 35.37. What do we need to see to confirm another breakout? Like, what needs to be the closing price to say, okay, we've done it, we broke the compression triangle here, let's move up?
If we see gold move back and break above this line, and this line would come in roughly at 3,420. And then if we get a final corrective wave, because we could easily see it break above there, if that's the case and it breaks above on this rally, then we want to look at recent areas where it's traded to. 34.70 is really the major level of resistance because that is the highest opening price we have ever seen gold trade at. Let me blow this up a little bit so you can see. This is the highest opening price gold's ever been at. The highest closing price would have occurred on Tuesday, May the 6th, and that occurred at about 34.72. So 34.72, right in that area is where we would look at for the first real level. Now, if gold breaks above there and challenges these all-time record highs that we saw on an intraday basis, well, now we're looking at what our long-term target was, and we're not basing it on any technical information because we're in new territory. And as you know, I have been on record at least for a year looking for gold to challenge 3,600 this year, the first quarter of next year. And so I still believe that is a realistic target. It might be optimistic when we're looking at gold well under that, but I think that that is achievable.
Yeah, looking at the chart here, Gary, you know, uh, seasonality. I can't shake that thought. Are you seeing less volume in the trading right now as well? Like, I'm just lacking complete impulse here. Like, we got a higher dollar. Gold doesn't care, as I mentioned. As you said, tariff situation. Gold doesn't care. CPI print. Gold doesn't care. Does it go in hand with lower volumes in general?
Well, I've just put up our volume, and you can see the volume. And let's go ahead and compress this. Is really been fairly stable. Of course, it's not as strong as it was through the month of April. This is where we had some very strong volume, but volume hasn't really contracted that much considering we're in summer trading, so to speak. I don't see that volume has really decreased tremendously.
I'm really trying to come up with a theory here, Gary. Maybe you can help me. It's like, why is gold trading so lackluster? Like, that going more maybe away from the chart here, Gary. But it's like, what's your interpretation? Why do you think gold is not reacting at all to what we're seeing right now? Why is it so lackluster? Is it just the move has been so strong, and we are in that consolidation phase, and everybody's just content? Everybody's just, I hate to use that term almost, but Goldilocks. Everything's fine. Everything's great.
Well, obviously to get gold at 3,000 and beyond, in terms of market sentiment, the bullish market sentiment in gold is telling us everything is not great. It's telling us that there are concerns about inflation, primarily due to the tariffs. And that's an ongoing challenge because we don't know where that's going to land, what the level of tariffs will be with what countries. Trump has now put another line in the sand. This one is August 1st. So we'll have to see how that plays out. We did get, as I said, a most recent CPI. We did get an inflation report that didn't show inflation really spiraling. And so if anything, I still see bullish momentum, even though we've seen a compressing range. And the key is right now, the volume is okay. It's not super hot, but at the same time, we're looking at gold at a level no one's ever seen. And so I believe the performance has been good. And anytime you have a market overheat, and I will certainly say that gold from February of 2024, from $2,600 up to just over 3,500, you watched it move between $800 and $900. If you take away what we call the wicks, the intraday highs, the intraday lows, phenomenal move. How many years can we go back when we saw gold gain, $800, $900? There is no other time in history when gold has done that. And I think that with that kind of performance, many traders are cautious about betting that it will continue to rise. And the fact that the range is compressing, I believe, is really summer trading. Even though the volume is still okay, you don't have the large institutional traders. They're all off in beautiful lands like Australia, taking in the sun and taking it easy with their family. So for the most part, you have, I believe, the speculative trader is there, but the large institutional trader is absent right now, at least the primary money managers in these large hedge funds.
I would have expected them to be rather in Connecticut, but Australia. But up there in New Hampshire, maybe Martha's Vineyard or something, just hanging out up there. But no, Gary, I'm looking also for some correlations as well. Like the DEUTSCHE is showing some strength here, meaning the dollar is gaining versus other currencies. How does that play a role, and how is gold reacting to that, and how do you see that correlation working?
Well, let's take a look at the dollar for a second. Let me go ahead and compress this chart a little bit so we can really get an idea of what it's done, and we don't need stochastics. Give me one second.
People have been calling
here.
for the death of the dollar here as well. So, but it's now showing some strength during the COVID, not COVID. So we're not sure where that came from. Tariff discussions. So I'm curious what your take on that is.
Well, look, we did get a fall from really not record levels. We've seen the dollar above 109, 110, but you have to go back a decade to see that. Gold has fallen, and it's fallen hard from 110 down to this recent low at 96. That is what, a 12, 13% devaluation against the basket of currencies it trades against. Of course, the weights are uneven on the dollar index. The euro is the heaviest weight, and there are, I believe, 7 other currencies or 6 other that compose the index. But we've seen the dollar fall under pressure. And the one thing that we've seen really since February of this year, this green line represents the simple 50-day moving average. And that has acted as resistance. Every time the dollar would pop up here, here, and here, you saw the dollar back off. Now, I don't believe that it's trying to fit this frame. In other words, I don't believe that the dollar is weak because it approached the 50-day moving average. I believe that the market psychology behind traders fuel it so that when it gets to these levels, they believe at least short term it's overbought and they bid it lower. We do have a tentative bottom, but what I would like to see is the dollar break above the simple 50-day moving average, because that's what we saw back in September 2024 up to January of 2025. And the dollar has been in a spiral ever since that. I mean, it's gone down or devalued by over 10%. That's a huge move in a short period of time, relatively speaking.
Yeah, I would assume like we're seeing the same euphoria, that we could see the same euphoria back in the dollar price, because big beautiful bill has been passed, the US showing some strength on a global stage, and just showing up again. Same euphoria we've seen back in September when it was somewhat clear that Donald Trump might win the election. The same euphoria kicking in here as well, and just regaining that strength. Like, again, a hypothetical thesis here, but would you agree with that?
I would agree with that to some degree, but to me, this is a large fiscal deficit, budget deficit that continues to grow, and that's what's devalued the dollar. I mean, fundamentally speaking, this recent move up that began at the beginning of the month, and we're only halfway through the month, has taken it from 96.50 to 98.50, let's say. So it's moved it up about 2%. That's a large move. The question is, will we see it break above this? And we can't, with any stretch of the imagination, if we put a trend line from these series of highs here, we do need to see the dollar break above that. So the market technicians, and they are predominantly the trader's mentality, are looking at these technicals, although we know that fundamental events are what move markets. We know that traders tend to, I believe, have that self-fulfilling prophecy, whereas when we look at a stochastic oscillator, if we buy it every time it goes under 20 and then crosses, as it did here, is that a self-fulfilling prophecy? But the key is this. We've seen, if we look at these different areas, so middle of May, that's a top. First bit of April, well, that's kind of a top. But really, you're getting a series of tops, and these bottoms are all a series of lower lows, and you're getting lower highs. And that is the definition of a market under pressure. And we haven't had a major breakout. We've had the dollar go to a point where it became extremely oversold, devalued, and then we would see it move up, but the moves up were limited. And the underlying factor we focus on is that when it returned to a point in time in which the dollar was devaluing, it traded to yet a lower low or a lower close. And that's the key. If you keep making lower closes and lower lows, and you're making lower highs, you've got a market that's moving lower. It's the opposite of what we're seeing in gold. Here we see a clear trend down. In gold most recently, we see a clear trend of being sideways with an absolute top. So we've got what's called a flat top and an ascending bottom is what we're seeing in gold. And that's nothing like what we're seeing when we look at the dollar, unquestionably.
No, very, very interesting. Gary, since you brought up the gold chart at the end, just one last question on gold before I saw that you had silver queued up here as well. About the gold price. What was the average price of gold in Q2? Because the miners are reporting here shortly, so I want to give our audience a bit of a sense of what that might look like in terms of like free cash flow and what kind of price expectations we can have.
Yeah, I don't really, it's not a computation I've done, but if we just look at the price range from the highs at around 34.70 to these lows at 32, you just got to take that range and go right in the middle, which is really 33.35 roughly would be the middle point, which is we're just above that right now.
Tremendous. No, really appreciate that. There's interesting. I just want to give my audience a bit of an overview. Like, what can we expect when the big miners report their their financials at the end of July here? So that'd be really interesting to see. So, but Gary, like I mentioned, I saw you have silver queued up. We do have to talk silver real quick because the silver put in a really, really interesting move up to over $39, but it's been fading since. Give us a quick overview of what are your thoughts on silver here, Gary?
Well, to really see silver with any kind of context, I almost got to put it, monthly. Let me move it to a just to give you an idea. The high that we hit when silver broke above 39, of course, that was briefly. Now, this is on a monthly basis. The last time silver was at these price points was 2013. So we're looking at history in terms of the fact that silver has really never even challenged much above $33 per ounce for the last decade plus. And so this is something to get excited about. Silver is not something that I follow very, very closely because it was so pressured to find these tops just above $30 an ounce to come down. There was some excitement back in 2020 when we saw it actually really peak from about $20 up to $33. It came back down to 21, and then we solidly broke above these tops from 2020. And historically speaking, look where we've got to go to see the last time that silver was priced anywhere above 32, 38 or challenge $39.
Yeah, no, impressive move here. Absolutely. Just a bit of speculation. Why do you think silver faded? Is just too strong of a move? Again, consolidating, people taking some of the money off the table and just waiting for the next move up?
Honestly, the only answer I can give you is it is above my pay grade. I mean, one of the theories are that gold was so costly and had moved in such a large percentage gain, as we just talked about, that silver played catch up, those that follow the gold silver ratio. But I don't even want to put a hypothesis forward that I'm comfortable with, honestly, because as I said, the best way I can define my sentiment, it's above my pay grade. I just think that those that witness gold break above, 26, 27, 28 to 3,000, 32, and silver was rather tame. It was bound to happen that at some point, attention with traders would move from gold into silver. Gold is still the ultimate safe haven asset, along with the dollar. And silver's never really been in that wheelhouse. And it's the high level of industry. And of course, that would be tied into GDP. But I would think that would be more in your wheelhouse than mine.
No, Gary, I couldn't have said it better. I think silver is the safe haven, demand haven right now, I would say, because it's cheaper than gold, much cheaper, and they're still got ways to go. So absolutely, I tend to agree with that theory, Gary. No, Gary, what a wonderful conversation yet again. Like, always appreciate having you on. It's a bit of a rhetoric question nowadays because if people don't know where to find you, they must be living under a rock. But where can we send them to find more of your work, Gary?
Well, thanks for asking. TheGoldForecast.com. That is our website where we provide our premium daily video service. We do 5 videos per week. And of course, our YouTube channel, which is The Gold Forecast, where we've used that as our conduit, so to speak, for all of our videos. We've got over 3,000. It goes back well over 10 years. So you can get an idea of how we looked at gold prices back 5, 10, 11 years ago, and they're all available at no cost. So you can get an idea of how we chart the market, how our inner thoughts work to extrapolate where we believe prices are going to go. TheGoldForecast.com. Yes, thanks.
Amazing. Gary, thank you so much for coming on. Really appreciate it. Good to see you and to everybody else. Thanks so much for tuning in here to Soar Financially from the road. Much appreciate your support, and thanks so much for the comments down below. Really appreciate them. Put them down. Like, where do you think gold is going? $3,600. Is that still intact in your opinion? Really curious. Or are we going much, much higher or lower, actually? Put it down below. Really want to hear from you. And if you haven't done so, hit that like and subscribe button. It helps us out tremendously, and we much, much appreciate it. Thank you so much. We'll be back with lots more here from the road.